Hello, everybody. I hope you're having a fantastic day and welcome to another one of our videos. We also hope you had amazing holidays and your new year was filled with love and joy. And yeah, today we wanted to go over the Hasbro Fireside chat that took place on the 8th of December of last year. This is going to be a fairly lengthy chat, and we'd love to hear your thoughts about it. So please comment down below and if you like our content, do like and subscribe because it really does help us. Or if you don't like it, just thumbs down, whatever suits your boat. Now, there are many reasons why we want to go over this chat, but the main ones are figuring out the future of Magic the Gathering, Dungeons and Dragons, and other franchises that Hasbro and Wizards of the Coast have, and what they plan to do in the upcoming years for these franchises. Now, we will go into a step by step throughout every point that was discussed in this so-called quotation marks chat and provide you some insights, knowledge, and opinions on the things that they discussed within it, and why reading between the lines alongside some industry knowledge will help us map out in big lines and broad strokes what Hasbro and the folks in Rain Seattle, Wizards of the Coast, are planning to do. So, without further ado, let us jump into it. Now, in the following analysis, we will bring up the point by point discussion inside of the call. Now, these are about 14 points, and if you're here for Dungeons and Dragons, they do sprinkle a little bit of it in between, but the main point of the Dungeons and Dragons future is going to be the last one, because this was mainly focused initially on Magic the Gathering. Furthermore, we will see who the call was actually aimed at and who it was for, the important things to take away from it, including the reading in between the lines, and also the likely future of Magic the Gathering, Dungeons and Dragons, and other franchises owned by Hasbro. Now, um, what most people were maybe expecting was an apology of sorts, or at least an empty one. Unfortunately, these are corporations worth hundreds of millions of dollars on a publicly traded market. So for them to come out with an apology, it would mean somebody would have to take a blame. You have to remember that here, the CEOs, the VPs, the presidents, all these people that are filling up the position can all be fired as scapegoats at any point unless they own a very large share of the company itself or are founders and co-founders. So what we got instead is, well, spouting of corporate talk that was well rehearsed and well planned ahead of the call by all the participants in the call itself, right? So it was more a show or a badly acted movie than an actual chat or conversation. The show itself was for the investors. Uh, this talk happened because and the same quarter that this talk came out, Hasbro stocks tanked over 40% in value. Yeah. And the lost money in revenue coming out of years of continuous growth, and because the company itself was the target as widespread media, journalists, and overall the attention due that they received due to their super intelligent way of monetizing people addicted to gambling, aka the 30th anniversary edition, right? The call was meant to reassure shareholders and to stem the bleeding before the company became fire sold, especially because the CEO and presidents will likely be axed as a result of all this negative attention they were receiving. So, really, they have not said something important otherwise. Remember that the shareholders themselves don't necessarily need to know anything about the products that a company that they have invested in, right? They are only there interested in their numbers and growing profits. But the negative media attention put a lot of panic down their pants. I hope that they were wearing brown pants, honestly, because they probably had to go to the toilet a couple of times. Now, the first important key takeaway from the call itself is the fact that it wasn't a publicly held conversation nor an interview from a reputable news source, right? The person in charge of the call was Harpine Kocharian, or Arpine Kocharian, I'm really sorry if I butchered the name, and she is the director and executive director of UBS, who is an investment banking group with headquarters in Switzerland and a company that works with and for Hasbro. Now, this is likely due to all the negative attention that Hasbro was receiving. That UBS advised Hasbro to have a public statement made out as a chat to address any and all worries that investors and shareholders could be having. You can trust me that when I say that the answers in this chat were the result of very several hectic hours of brainstormings and a calm direction from UBS themselves on how to navigate these panic times. So now we will go over all the points discussed in there, and we will start with the first important part, which is the disclaimer. Now, the disclaimer is important not only because it's a liability issues from a legal side of things. In fact, the person who reads out the disclaimer, Debbie Hancock, only speaks this one time other than saying hello and goodbye and thank you. Her role is to, well, head the investment relations for Hasbro's themselves, right? The importance of the disclaimer comes from removing the liability from anything that they might say about future products, future plans, and more importantly, future results. Now, the liability comes from anything that could be said in the chat. Basically, if it all goes to for having said anything or for saying anything, that would go down harder than two people 69ing here in this chat, right? Because if you're lying about things or are unsure about things and the company then tanks, well, it can't really be their fault because they couldn't be held legally accountable for this. Again, remember, their jobs are on the line. Yes? Now, the first few questions made by the UBA's first person are about giving an overview of Hasbro and Wizards of the Coast situations and how they're planning to overall grow the business, how they've done it in the past, and how they plan on doing it in the next few years. It's a broad question. Mainly, it's aimed at Chris Cox, the CEO of Hasbro, and it shows what they've done to improve the situation and revenue of the company in the last year. The main thing that Hasbro has done, Cox says, since 2019 is focusing on surrounding their consumers with as many products as possible, right? So what they've done is do this depth approach, and more specifically, for example, you can see this starting with Blueprint 2.0 and Magic the Gathering. This is what they say around Throne of Eldraine, where they have taken 8 to 10 specific brands, including Magic the Gathering, and pushed the pedal to the metal to really, really grow them because they want to make these brands more profitable and go above the comparable average of similar products and create nice little profit profiles, which is, of course, for the investors, shareholders, and the company itself. Now, they state that since October 2019, they took a big risk and moved away from the targeting competitive players in Magic the Gathering and instead, quotation marks, gambled on collectors and casual players, and this turned into windfall for them. And now about this point, there's also something really interesting that they say. This part is about the segmentation, right? You will hear this over and over, and they stated here that the Blueprint 2.0 was about segmenting their consumer base into three big parts. And these parts are competitive, social, and collectors, and target them separately with specific products to get the best and most results out of each category of users. Two very key important things are brought out here at this point, and we should take a closer look at them and read between the lines, or, well, just state out the obvious here. And I quote, they will strive in the future years to drive discipline with incremental excellence, a stronger cost management, and make sure that they save costs to the company between 240 to 350 million over the next 2 to 3 years. Now, this clearly defines a plan for the next years, and it goes hand in hand with the fact that Hasbro has declared yet another blueprint in 2022 to increase profits by 50% in the next year. So, by the next 3 years, they want to increase 50% of revenue. And for those who aren't aware, revenue and profits are actually not the same thing. Just because revenue, which, if I were to put it in a simple way, is all the money in the bank that you get by just selling your products and services. Now, just because revenue is very high, it doesn't mean that the profits are just as high. If you think about it, if you have very high costs, which is something that impacts profits, then you will have less profits. Out of revenue, a company has to take away the costs, the taxes, the price of operations, and the production. And by lowering the amount of money they take away from the revenue, they will have a lot more money left to give to all the shareholders and investors in the company when the dividends are handed out. Now, these two statements, so the previous ones and the 50%, are and they're planned to really outline for us that they will try at any and all times to cut out the middlemen where possible. Now, this is because, for example, to print a super expensive 1,000 pound or $1 box, or to print a normal draft box, which costs only over £100, they spend the same amount to us, right? For us, for the end consumer, they spend the same amount making it. But the 30th anniversary edition and other non-major products, such as their secret layers, they are sold directly by Wizards of the Coast, and therefore they cut down the sales to distributors and shops. For those who aren't aware of how this usually works, let's try to make an example. Now, all monetary values in the following example was just for show. But let's say that to manufacture and ship a box of 36 boosters, Wizards of the Coast spends $10. Then they have two choices. Either to sell it to a distributor for, let's say, $80, making a $70 profit, or they can sell it directly to you for $120 and make $110 profit, or sell it via Amazon and only use the fees charged by Amazon, which we could say, I don't know, they're $10 per box. Furthermore, by only shipping to Amazon and directly to consumers, they can save on shipping fees. As you can see from our simple example, it makes much more sense for them to do as little work as possible for the highest amount of profit. Furthermore, regarding Dungeons and Dragons, they found out many ways to monetize it as much as they push Magic the Gathering, right? So I would advise you, if you're interested about this, wait until the last point of the discussion to see how they explain this, and throughout the process, what they say, and it would all make sense in the end. Right. So the next few points go hand in hand as they are discussed by the CEO of Hasbro and also the president of Wizards of the Coast, and they go into discussing the consumers and also the segmentation and how they're being targeted. So they go on to discuss on their very big turnaround that was previously highlighted on a previous point that their segmentation created for them. The answer of the demographics, how users are divided amongst all the consumers of Magic the Gathering. And they say that they managed to see that, 80% of all Magic the Gathering players are casuals and only 20% really are competitive. And more importantly, out of all these players that play Magic the Gathering, 70% are Commander players. And out of all the players, about half of them are a collector of some kind, and the other half is made of social players. Even more importantly, they go on to discuss how incredibly key Arena is to them, and that they found out another prey to bleed dry, hybrid players. So those players who both overlap with online and in-store by playing Magic the Gathering, and these are actually their biggest spenders. So, of course, they want to try and convert as many players as possible to become hybrids, because alongside collectors, this is another target that they see that will bring a lot of revenue. Now, next up is the fact that it's very basic in marketing is that they state that they want to start retargeting previous players or people who enjoy Magic the Gathering, who have played Magic the Gathering in one way or another. And they estimate that there are around 60 million players around the world who have played Magic the Gathering, and that they will focus as well on trying to bring as many of them back as possible. Now, these the overlapping of the hybrid is a very, very important key factor here because the hybrids identifies, yes, another important key demographic that they want to target, which has already been said, just like collectors bring in a lot of money. And the other fact is that they want to retarget and reach out to as many Magic the Gathering players as possible. So that have played before, which means that they will double down on their remarketing tactics, and you can see much, much more exposure of Magic the Gathering products upcoming in the next few years. Now, this exposure comes with the new approach, basically, of the fact that they plateaued in 2016 and they managed to get out of the plateau by segmenting competitive, social, and collectors, and the fact that they are have planned to build products that target each of these segments that you see here: competitive, social, and collectors. And as you can see from secret layers and collectors items that have been published in the last few years, these are the ones that Magic the Gathering and more importantly Hasbro is monetizing the best with the best profit margins, right? And on top of that, the segmentation approach, it wasn't just a jump in the dark, right? So uh, the fact that they figured out the collectors and the hybrid players with Magic Arenas is common industry practice, no matter the fact that they say that they took a gamble and jumped in, because corporations, companies hire teams of psychologists and try and segment and test out what works, what doesn't. And when they go publish, right, they can go and push the pedal to the metal with all the products and make incredible profits off of these new found targeted customers. So this is something that has happened in many other things, such as gacha games on mobile or online games such as Call of Duty or NBA, where online games have every single aspect, every single click, every single color, every single animation is all thought up with the idea of a psychological analysis, right? There's a psychological study at the back of it that allows each click and each action to entice the consumers to spend more, and even worse, which is great for the company but really bad for the users, that the preys upon the ones who get easily addicted from this process, right? So keep in mind that these collectors and the hybrid players are going to be the key focus of Magic the Gathering moving forward, and they will try to maximize as many of them as possible and to turn them into hybrids or collectors as much as possible. Now, the next question addresses the players and consumers with the in-person activities that is their focus on Magic the Gathering, and more importantly, on Wizards of the Coast, and what steps Wizards of the Coast has taken to bring more focus and to the in-person activities. Because up until now, they spoke a lot about collectors and selling, and mostly about online and nothing to do with stores so far necessarily. Now, um, they know that they will continue to bombard user with lots of big releases each year, because they know that in-store purchases are currently the most considerable profits. They go on to discuss the fact that participation has risen back to 75% of pre-pandemic levels, and Gee, I start to wonder why it's not 100%. Could it be that maybe you guys are doing some big moves, but who knows? And they can't dis then they discuss how big of a success MagicCon has been revenue-wise for themselves, and that they plan to do more MagicCons in the upcoming year. Furthermore, they plan to push or more universes beyond and to get more in-person players to try Magic the Gathering by bringing in these big IPs. In fact, in 2023, we'll see the focus of Lord of the Rings as a huge, what they call tempo release for Magic the Gathering. Now, tempo releases are what they call main expansion and not just the side products or secret layers or stuff like that, right? They also said that in the upcoming years, they plan to bring, as we've heard, Final Fantasy, Doctor Who, and even Assassin's Creed in their own universes beyond. Lastly, the little cherry on top, which we all know that it will taste like shit. They state that they will continue to reward the WPA and partners with more products to hand out to players through their 30th anniversary promotional products, which literally translates we will give a little bit of scraps to WPN stores to quote unquote reward them, make them feel special, so they can give it to the players, and we can show that we're trying to still support the WPN and in stores while we try and figure out how to monetize the living crap out of everything else and move away from stores if possible, as much as possible. Now, in point 7, they go on to discuss how much more they can monetize the digital aspect. Since it's such a big profit margin for them, and the fact that it provides them with these hybrid players, which they've identified as really big spenders. They say that they will go out of their way to try and convert more players into hybrids, and that they will incentivize them to spend even more. It will focus on onboarding, which means taking more users on board on a specific platform, and more users onboarding more users by finding what they like, what they prefer the most, and then cramming it down their throats like in the area where ducks bred for foie gras. Then they explain that the digital aspect will also have a large boost with the appearance of Arena on the Steam platform, therefore, again, improving the old onboarding. Although they don't give a clear launch date for when Arena will become part of Steam, but it will also be around the same time that they've launched the first Universes Beyond set online on digital with Lord of the Rings. And lastly, something that they've started doing kind of like at the tail end of last year and is still ongoing is a focus of continuous spam of MTG Arena events like decathlons, championships, opens, as they're a really good profit margin for them. So, well, expect to see a lot more of those coming back up. Um, Next, in point 8, they tackle the idea of having to have raised the product price and how price sensitive Magic Gathering consumers are. Now, the UBS speaker asks if the consumers from Magic the Gathering are more price sensitive than all other games and similar products. And again, this chat was thought up beforehand, so don't let yourself be fooled, right? There's a reason why they go into this discussion. Of course, Cox says that they are more price sensitive. Um, and it's well, they say that they're not as price elastic because they saw that price sensitive blew up in a really bad way. They don't actually say price sensitive at all in here. Now, the speaker goes on to ask if Hasbro has any plans to make more revenue growth based on the prices and the print runs by driving the prices of products and increasing the print runs. But, the CEO says that it's not what they're aiming for. This is clearly a try at addressing the fact that, consumers and more importantly, shops and distributors have been struggling with the new price increases, the fact that they lowered their margins, and also that they removed MSRP. Now, and state that due to the industry price increases, namely the cost of printing, the cost of paper, and also because of the high demand of increase of the product, they've had to raise the prices of about 50% of their product range within Magic the Gathering. Now, this last bit, the one about raising the prices due to the high demand, it's it's kind of like a backhand way to say that due to high demand of the products and due to their philosophy of seeing continuous profit and revenue growth, they've upped the prices more than just to cover extra costs, but to meet the demand with even more profit margin. Because again, remember what they said about wanting to cut costs by upwards of 350 million to make sure that they have better cost management, right? So this is a very good start for them. The other ways that they will do this will come clear on highlighting point 11. Then they end up finishing this discussion by stating once more that the way they actually plan to bring more revenue profits will be by leaning into the segmentation. Strategy that has been working so well for them. So again, we show you as clues the fact that they are aware of how less elastic we are as consumers. They state that they don't want to raise the prices necessarily of products, despite the fact that they did for the Magic the Gathering 30th anniversary and price anchoring for that, and that they will not stop because they will continue leaning into the segmentation strategy that has worked so well for them. Again, I will get to my conclusions at the end, but this kind of is a contradiction with what's happening with the tanking stocks and decrease in revenue. But you know, the next point um, is the one where they continue discussing how Magic the Gathering players, and Magic the Gathering wants to keep growing revenue and profits outside of just pushing for a price increase, right? So they don't want to just price increase again, despite the fact that they've tried to anchor the price of a collector's product to try and see where the sweet spot is. And again, they're repeating this to make sure that investors understand that the price increase wasn't meant to be seen as a revenue growth strategy, and that the consumers, distributors, and shops are just being hard to deal with by not understanding that prices will grow with inflation. Despite the fact that we, Very Friendly Sharks, has explained that that's not the only reason for the increase, even though they can't legally come out and admit that that no one outside of Hasbro and insiders know actually the numbers calculated of the margin of profit that they got out of this price increase. Therefore, Wizards of the Coast, president states that they will continue pushing as many products and SKUs. SKUs being a stock keeping unit, which is basically just a unique ID for each product. So collectors has a different ID than a draft booster box, than a set booster box, which means as many unique products alongside as printing them as much as possible to meet these demands again. And all of these SKUs, including the extra smaller ones, will have always a specific market target in mind to make sure that every single person in the segmentation that could fall in between the cracks from top to bottom, giggity, that the demographic is hit and that there's a product suits them as well. Now, they say that they will not print fewer versions per year, nor that they plan on slowing down releases, right? They say that they made a mistake when planning release for two products on the same time week, but they will stop trying, like they will avoid doing that again, but they will not stop the continuous print runs that they've been doing and publishing so many products per unique products per year. Again, the takeaway from this is that this segmentation strategy is something that is the key to growth and the flooding of each segment with as much possible purchases is the way for them to push the pedal to the metal and make revenue. They also clearly state that all small products outside of temporary releases are really just opt-in options, right? So, which is another way of saying that you don't have to buy it if you can't. Now, this flooding products is a strategy to monetize the living heck out of everyone. And if you can't keep up with it, then it's okay to them. Of course, this is a very common practice in capitalism. The problem is, when is enough money enough? Because there can be continuous growth, and a lot of companies saw a blip, a rise in COVID. Some went down, but some went up. And COVID dramatically increased the sales for WotC and Hasbro and profits, but it is not being seen or treated as an anomaly like most companies still do now, right? Like a lot of companies do the same that Watson and Hasbro are doing. I mean, just in the UK, Tesco's is doing the same exact thing. And I think from an investor's point of view, a quote from Cuban, who is a very successful American investor, he said, and I paraphrase here, I was worth $1 billion. How much more money did I need? Because, but most companies out there only focus on a quarter growth, right? Not on the customers or their experience, because they focus on the growth and the unicorns, and that's what matters to investors. Now, the next point is more of a highly discussed topic within the MTG community that hit the main media stream, and they all go on to discuss the overprinting of cards, and they ask, is it true? Note that here, what they classify and discuss as overprinting is not what I would intend. Um, because WotC's president goes to say that most of MTG is printed to demand. This means that they aren't actually printing more than what can be absorbed by the market itself. Again, this is funny for two reasons. The most products doesn't really define how many and which products they are going out of their way to print tons of from the get-go. Yeah. And more importantly, the fact that they don't see nor acknowledge this fact, like seven different versions on a different card, all the different SKUs with a single product, that are single unique products, or the amount of releases per year as overprinting or flooding. They don't see that as overprinting. In fact, it's the living, breathing part of the strategy to keep that they keep reiterating time and time again. Therefore, they say that there is no evidence that Magic the Gathering is overprinted. There's no evidence because they don't talk about the fact that, by now there are so many releases, ending up in 1 year, more releases in 1 year than in the previous 30 years combined. And the fact that each card comes in so many versions that it depreciates the value. They kind of go into discuss this a bit further later down the road, but they don't see that as overprinting. And again, it's part of their strategy. Now, in part 11, they go on to discuss further methods that WotC and Hasbro can use to put Magic the Gathering into the consumer's hands. Now, the president of Wizards of the Coast goes on to acknowledge that, 70% of the sales are coming from WPN stores. Again, do keep in mind that they're stating this for two main reasons, right? So first, because they need to acknowledge that their system is still working, and second, because if they need to move into less into cost cutting, right? And so less cost, they need to be mindful of how not to screw over WPN stores. Because it's at the moment their livelihood, their lifeblood. If they could figure out a way to cut them out altogether and still make the profit, they would do it without in a heartbeat. Um, Furthermore, they go on to discuss how 80% of the WPN stores report growth or same revenue as the previous year. Right now, this is a very simplistic figure that makes you think they're counting all the WPN stores in the world, but then they actually say that they're only talking about 8% out of 2,200 stores that have actually filled a questionnaire where they asked this question. Again, they're trying to move away from the fact that the price increase and the product fatigue for most stores is an issue, and that they are putting the attention of the investors on the fact that actually there are no problems with our WPN stores, and the vast majority are actually doing just great. Two thumbs up, one in the butt. Then, most importantly, the key point of this question is addressed where Wizards of the Coast states where they have increased their global footprint, which is into retail, yeah, by spamming products more than a horny teenager boy who just discovered masturbation spanks his monkey. E-commerce, which is the deal that they made through Amazon, and direct to consumers, which are all the collector's products that come along the Secret Lair and the 30th anniversary. Now, the last 2 points of the Amazon Direct um, uh, are key because these are the places where they will focus their growth continuously in the upcoming year to hit their goals and saving hundreds of millions in costs by cutting out the middlemen as much as they can, which is the distributors and the shops. Now, on point 12, um, they discuss yet another part of criticism that WotC has passed into the mainstream media, and it's about the secondary market prices tanking due to overprinting products. Again, what they see here as overprinting is not what most people would discuss as overprinting, because the UBS speaker goes on to ask if Wizards of the Coast tracks secondary market and if it concerns them. Now, WotC states, and I quote, that they do not participate in secondary market and do not derive any revenue from trading or selling on that market. Now, but they do keep track of these markets through WPM feedback. Now, we know that this is a roundabout way of them saying that even though they can't or won't legally buy or sell any products nor acknowledge the secondary market, well, since it would bring them in the same field as gambling for, slot machines, gacha games, if they legally acknowledge this and attributed a value to each product to the secondary market, right? Um, they the roundabout way of saying this furthermore underlines the fact that you can see they keep an eye on the secondary market, right? But we know that it's not only through WPN networks, but they can go on to say all the methods because they will fall into the acknowledgement of the secondary market and then again the issues that we just described. Now, I go back to the main question they state that again they do not overprint and that they even went out of their way to limit print runs for the 30th anniversary to assure a great collector's experience. Much to their financial detriment, they add. And honestly, sorry, but I have to laugh here because they clearly use their not roundabout excuse to cover two things. Now, first off, they printed a limited amount of 30th anniversary because they wanted to monetize the fear of missing out, what people call FOMO, out of collectors. Now, and these collectors, they are the target segment of their strategy for this specific product. This is who it was made for. And also, to target the ones that are more susceptible, like collectors, and susceptible to gambling. They didn't do it out of the goodness of their hearts, nor to improve the collector's experience. Secondly, they pumped the prices a ton to see how high people were willing to go to spend for a direct-to-consumer collector's product. Now, for those who don't know, this is a very common marketing tactic known as price anchoring. Right? This happens when a company starts off with one price for a type of product, then ups the price to an extremely high amount for another similar product, and then they can go back in the middle with the price where they have the best quantity of sales and revenue, and also they look like they've listened to customers because they went out of the way to lower the pricing, right? So this is very common. Don't fall for this. Lastly, they reiterate that they do not overprint, but that it's common for prices to shift after pre-release. So this is what they use as an excuse to state that the shift that does happen is not due to overprinting and that it's a normal value shift of a product in a simple supply and demand environment. Again, we've said that this is they know it, we know it, but their investors and shareholders and average people don't. Okay, so the next point It's going to be a very simple one because realistically, they didn't really go over too much information. And it's more a brief point where Wizards of the Coast is asked about talent acquisition and retention. Now, again, this is to reassure investors that they have the best talent in the business, that people want to join their company, and that they want to stay for a very long time. Now, this is because if a company you're investing in has a huge staff turnover, which means that, turnover is people joining and leaving, and a huge one would be uh, they quit quicker than a fly dies or lives, then it's a very clear sentence that there's something extremely wrong within the company itself. And that's it. Now, the other point, which is the last one, which is involving Dungeons and Dragons, and it's answered by both the president and also the CEO, and it's about the future plans to grow the revenue from it. Now, this is very key because they address basically well, there are two key points about this. The first one is where the CEO talks about the cocktail parties and Cox and his cocktails parties. Well, basically he goes on to say that this point is made to willingly piss off normal consumers with what he says, right? Because you have to assure investors that even at the high echelons of the investment, business people are now aware not only of Dungeons and Dragons, which is what he said that was before, and also MTG, whereas before it was mainly Dungeons and Dragons. Now, furthermore, here's where it all comes tumbling down for Dungeons and Dragons lovers and fans. So far, we've understood that Hasbro's tactic, right, like throughout this whole conversation, is to segment each viable demographic and then target them by spamming them with products that will attract their money. Yeah, so far this is clear. They've shown it at every single part, and this is what they call their blueprints or tactics. Now, Cox gets out of his way to state that what they did with MTG, they now plan to do with Dungeons and Dragons. Not only that, but they will also continue to bring Dungeons and Dragons inside of Magic the Gathering and to bring more MTG players into Dungeons and Dragons and vice versa, right? And into Arena, trying to create as many hybrids as possible. And this is who they're trying and hoping to convert into Dungeons and Dragons as well. Now, furthermore, they go into explain that they will move into a four-quadrant plan for 2023 or another blueprint, whatever they call it. It's just a strategy. It's a plan, right? Where from 2033, and they will activate the strategy of exposing the masses to Dungeons and Dragons by releasing a Dungeons and Dragons movie. And you can count on it that should this be successful, they will make more of his type until it stops being profitable. So whether it's going to be TV series or more movies, they will keep pushing it to the limit because this is what they've been doing so far. They will also focus on AAA games, including Baldur's Gate, and they will continue to push the depth of the blueprint into everything Dungeons and Dragons. So if you paid attention up until now, and saw the things that they were doing in MTG, you can be sure they will try and translate it to Dungeons and Dragons. And finally, and this is the key thing that we should have taken away as Dungeons and Dragons lovers back then in December, that their licensing teams and consumer teams are working hard to make sure more revenue is brought in, right? So this is the key moment and where they said that this is why the open gaming license has been changed right now. I mean, if you think about it, free royalties from external sources without them having to do anything more aligns perfectly with their cutting costs plan and increasing their revenue by 50%. It's all coming together now. Why should they continue to give access to free materials for third parties to monetize when they can just, well, make money off of them as well, right? This also sets a precedent, right, in Dungeons and Dragons to go back on their promises, but also sets a precedent for us, Magic players, as well. Because in 2001, they stated that they would never change or force something like the OGL, the Open Gaming License, to change. They had left a clause in there saying should further versions of the OGL arrive and should they be more restrictive, you are allowed to use any of the previously used versions um, at your leisure, right? Allowing you to therefore kind of like wiggle your way out of things. But this, a new OGL version, which other channels have covered in better terms than I will ever do, um, this one limits that ability. So this is very similar to how they screwed over the revised list in Magic the Gathering and how easily they could just go back on the reserve list. So hey, if you're really, really interested in your investments in Magic the Gathering, I'll be really careful where you're putting them right now and take, honestly, just take what Hasbro and WotC are saying with a grain of salt because no matter what, their bottom dollar is their final interest. They don't care about anything else, and tomorrow they could go back on any word so long as it's not a legal binding contract. Yes, and they can wiggle out of everything, no matter how much you think that you can create a class action suit, create just sue them. They can still do it because legally they're allowed. They own the franchise and they can do whatever the hell they want. And on top of that, they do not care about the secondary market. So for them, again, legally, they're safe on that side. So this has been, our review, an overview of this so-called fireside chat, and what we think it's a clear giveaway of the future plans for your favorite franchises. Now, here's the issue: their stocks have tanked over 40%, as we said before. Their revenue has decreased in quarter three for the first time in a very long time. No matter what excuses they come up with, yeah, and think to say to the investors, if the consumers continue to vote with their wallet and the decision will keep bringing the outside attention of mainstream media, right, not the decision of the consumers, but of WotC and Hasbro, you can expect that there'll be in of hell to pay in the direction, and a lot of people are going to have to resign or do early retirements and so on and so forth at high levels, like we've seen happen with other people within Wizards of the Coast and Hasbro. Now, the only thing that really matters is that they readjust. Personally, I think that if they readjust the ship course before it's too late, and they figure it out, then we're fine, or they are fine as a company. If they don't, we're looking at 2 to 4 more years of this kind of mess that we've had with things worsening, worsening, eventually and gradually, which will eventually either end in max axing of the staff and public apologies to investors and maybe consumers as well, but don't hold your breath too much because they don't really mean much of anything for the consumers. Or the company gets truly bought out through, I don't know, a hostile takeover of the shares at the face value of the shares, right? Now, we know that Magic the Gathering and Dungeons and Dragons will likely not stop. They've survived a lot of financial crises. And, it will still be there in the future unless, the company, the world ends tomorrow, I would say. But it will keep losing its soul and what made it a game that it is today. And or it will go back to striking a balance for all the players to, enjoy this wonderful product that we all love. Unfortunately, only time will tell, right? And I'm happy to be an optimist here, but realistic it's time to be realist, right? And it's not gonna get any better at all. It's gonna get worse and worse and worse until the investors and the shareholders start taking action. Now, until then, I want you to thank you kindly for sticking through the analysis. If you've made it through the end, kudos to you. Thank you so much for your time. I wish you a blessed day, full of wonderful things. Be good, and we hope to see you on the next time. Bye.